Hello everyone, and welcome back to Explain the Charts. Today, September 12th, 2025, we're putting Bitcoin under the microscope as it stands at a pivotal point influenced by a confluence of significant news and market dynamics. Recent macroeconomic news has heavily impacted sentiment, particularly the cooler-than-expected U.S. Producer Price Index data released yesterday, which initially boosted risk assets. All eyes are now on the upcoming U.S. Consumer Price Index report, which is anticipated to be a major catalyst for Bitcoin's next move. Crucially, market participants are increasingly pricing in a 25 basis point interest rate cut from the Federal Reserve on September 17th, a development widely regarded as bullish for cryptocurrencies. Institutional adoption continues to gather pace, with U.S. spot Bitcoin ETFs recording robust inflows, including a substantial $757 million on Wednesday and a cumulative $1.39 billion for September. This strong demand is evident in reports like Sora Ventures launching a $1 billion Bitcoin Treasury Fund and the U.S. House advancing a bill for a federal strategic Bitcoin reserve, signaling formal recognition and potential long-term demand. Beyond financial news, Bitcoin's ecosystem is evolving with key protocol upgrades like OP_return expansion and the activation of trustless SBC, enhancing its utility and scalability. Technically, some analysts are highlighting an inverse head-and-shoulders pattern targeting an ambitious $360,000, while a recent golden cross on longer timeframes has historically preceded significant price surges. However, despite these bullish indicators, a neutral fear and greed index suggests underlying caution, with concerns about profit-taking after substantial gains. Now, let's turn our attention to the charts to understand how these fundamental drivers are translating into price action and identify the critical levels for traders. Observing the daily chart from April 2024 to the present, Bitcoin has demonstrated a powerful long-term uptrend, ascending from the $60,000 mark and aggressively pushing towards new highs. We can clearly see the significant rally in November and December of 2024, which aligns perfectly with reports of Bitcoin's market capitalization soaring past $4 trillion and growing excitement around institutional investment vehicles. Bitcoin managed to break above the psychological $100,000 barrier at the end of 2024, a level it largely maintained through the early months of 2025, showcasing strong underlying demand. After minor pullbacks, a renewed bullish impulse in May 2025 saw Bitcoin climb past $110,000, consolidating before reaching a local peak of $123,380 in mid-August 2025. This peak can be seen as a direct reflection of the sustained institutional ETF inflows and positive market sentiment that has characterized much of the year. Following this high, Bitcoin entered a noticeable consolidation phase, broadly trading between $108,000 and $115,000 throughout late August and early September. The $110,000 to $111,000 zone has proven to be a robust support area, preventing deeper corrections on several occasions, which correlates with the news stating BTC is testing $110,000 support. The daily candle for September 11th shows a strong close at $115,499 with healthy volume, suggesting a renewed bullish impetus and an attempt to break out of this recent consolidation to the upside. This recent strength can be attributed to the favorable PPI data and the high probability of an upcoming Fed rate cut, prompting buyers to re-enter the market. The pattern observed here indicates that while longer-term bullish drivers remain intact, short-term price action is highly sensitive to macroeconomic data releases and market expectations. Failure to hold current gains could see price retest the $110,000 region, turning this immediate upward momentum into a potential reversal. Let's zoom into the 15-minute chart to analyze the most recent price action from the past few days, specifically from September 9th to September 11th, to pinpoint immediate trends and key trading levels. Beginning on September 9th, Bitcoin experienced significant choppiness, attempting to break above $112,000 multiple times, but being rejected, indicating strong overhead resistance at that level. Each rejection led to pullbacks, but notably, lower price dips around $111,000 consistently found buyers, establishing this as a firm short-term support area. The volume during these consolidations was moderate, suggesting a balance between buying and selling pressure within a tight range. Moving into September 10th, Bitcoin saw a more decisive upward push, breaking past $112,000 and reaching towards $114,000, clearly reacting to the positive market sentiment from the PPI data. This level quickly became a new battleground, and although it pulled back slightly, the overall bias shifted to bullish as it formed higher lows. The period leading up to the market close on September 11th shows a strong, sustained rally, with Bitcoin confidently breaking past $114,000 and closing near its session high of $115,537. This surge is a clear indication of market participants front-running the anticipated Fed rate cut and reacting positively to the latest inflation figures. The steep angle of ascent on September 11th, combined with increasing volume, suggests strong buying conviction and a potential breakout from the broader consolidation. For active traders, the previous resistance at $114,000 has now flipped into immediate support, a crucial level to watch for entries on any minor pullbacks. The previous one-hour data, although ending in late August, showed similar consolidation patterns after rallies, reinforcing the current market behavior as Bitcoin prepares for its next major move. This intense short-term activity will dictate whether Bitcoin can sustain its momentum towards higher targets or if it will face another round of corrections. Let's summarize the key price levels and potential outcomes for BTCUSD in the short and long term. On the bullish side, Bitcoin's immediate resistance stands at the $115,500 level, which it closed near on September 11th. A sustained break and hold above $115,500, especially if accompanied by strong volume, would likely propel Bitcoin towards retesting its mid-August high of $123,380. I assign a 65% likelihood to a retest of $123,380 if the upcoming CPI data is favorable and the Federal Reserve confirms its expected rate cut. Beyond that, the news suggests targets of $124,474 and even $130,000 in the near term, with a 40% likelihood for $130,000 if ETF inflows accelerate further and global market stability holds. For the bearish scenario, the immediate key support level to watch is $114,000, which has recently flipped from resistance to support. A failure to hold above $114,000 could see Bitcoin pulling back to retest the stronger support zone around $111,000 to $110,000, a level it defended multiple times in early September. There's a 30% chance of a pullback to $111,000 if the CPI data disappoints or if there's any unexpected hawkish signaling from the Fed. A more significant breakdown below $110,000 is less probable in the immediate future, perhaps a 10% chance, unless a major, unforeseen negative catalyst emerges. With the 200-day simple moving average around $102,000 offering a strong longer-term floor. Traders should closely monitor the actual CPI data released later today, the Federal Reserve's official statement and forward guidance on September 17th, and the sustained momentum of institutional ETF inflows. For trading decisions, consider initiating long positions on a confirmed breakout above $115,500 with validating volume, managing risk with stop losses below $114,000. Alternatively, for those looking for safer entries, consider scaling into positions if Bitcoin pulls back to test the $111,000 to $112,000 support zone. The long-term outlook for Bitcoin remains overwhelmingly bullish, supported by increasing institutional adoption, favorable regulatory shifts in some regions, and ongoing protocol enhancements like the Strategic Bitcoin Reserve. I anticipate a 75% likelihood of Bitcoin reaching $150,000 or higher by year-end 2025, assuming current positive trends in macroeconomic data and institutional investment persist, making any dips potential buying opportunities for long-term investors. Thank you for joining Explain the Charts for this in-depth analysis of BTCUSD, and remember to always trade responsibly.